Hey traders, this is Ron Haidt at Market Tamer. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves a risk, and specific financial issues shall always be addressed with your financial advisor. All right, we'll kick off here with the Dow. So on Friday, we had a nice little push higher. If I zoom in here on the daily chart, we can see it getting above the orange line, which is a 50-day, 50-day SMA moving average. That's institutional moving average. That is bullish. Now we can make an argument and say the volume was pretty lackluster, which it was, but nonetheless, we still have this W formation, which is bullish. Double bottom, we got above the 50-day, target is here, and then the previous highs. So you could say the Dow has now tripped another buy signal by closing above the 50-day, and if I zoom in even closer, you can see the blue line, which is the 5-day exponential moving average, a very short-term moving average, is now crossing up through the red line, which is a 20-day EMA. Exponential moving average. That in itself is also a technical buy signal. Yes, the volume isn't great, but price rules, and it is what it is. We're moving higher right now on the Dow. If we look at the Qs tacked on a little bit on Friday too. The 5 and the 20-day, basically the cross is occurring or it's imminent. The next target is 172.50, give or take, because that is where the 50-day in orange and the 200-day in purple, two institutional moving averages come together. We get above there. Then you go to these highs, then the previous highs. So the Qs are looking the same way. SPY. I still have a bullish position in the SPY. 5 and 20-day crossover bullish. Continue to stay above the 200-day bullish. We get above the 50-day in orange at 277.50, which is about 20 S&P points or $2 on the SPY higher. Then you go to this high, which was the swing high, which coincided with that little high. Then we go back up here. So all we're doing is just looking for previous turning points, and those are the targets now on the upside. You can still see the W formation here too. If we take a look at the IWM, the Russell 2000, the 5 and the 20 are also about to cross. Here the up volume is beating the down volume. Up days are red, down days are, up days are black, down days are red. So the up days are beating the down days. It's lagging. It's not doing as well as the SPY or the diamonds. But you just go 50-day, then you come to this high, then you go 200-day. Once it gets above 160, that's where it's free range right up into the 170 area. Here's MDY, your mid caps. 50-day is just about $2.50 away. Same thing, previous high, 200-day, and then it's back up here. We already have a higher low in here. This is looking interesting. And then if we look at the VIX, zooming in, it's starting to roll over, which coincides with the market starting to break out to the upside. So if I use the S&P for the proxy, it's bullish. We're tripping buy signals on the Dow and the S&P, and with news that the tariff war is going to take about a 90-day hiatus for the holidays and resume in February, it adds up to one less headwind the market has between now and then. The seasonal holiday rally can still happen. There's still time, and we are getting our bounce. So again, bulls get the edge walking into this week. We're above the 5 and the 20-day on the majors that we look to follow. Now, sticking with some seasonal stocks that are bucking the trend. How about Delta? Big move Friday, broke out to new highs, cleared a triple top, if you will. Even though the markets were pulling back, what were the seasonally bullish stocks like the airlines doing? Ripping. They were going right up. In fact, from their lows, which were put in October, there was never even a retest. These things have gone from, you can say, the low 50s now all the way up to 60. And ever since it got above the 50-day, it's tacked on 4+ points. And then if you go to United, another seasonal bullish airline, look at this. There was the low in October, put in a higher low, and since then it's gone from 87.50 right up to 96, which is about 10 points higher. So those guys are looking good. Another seasonally bullish stock that had a good day on Friday, but did opposite of the airlines, right? So Home Depot enters a bullish period now, where the airlines were already in it. Nice close above the 20-day on Wednesday, follow through Friday. But look at this. If we take out this high right here, which is about 187 or so, 187.5, we're going to clear both institutional moving averages, the 50-day in orange, the 200-day in purple. The next target above 187.50, all the way back up into low 200s. So that's going to be very, very interesting to watch. And you can see how the big volume now, the up days are completely dwarfing the down day. That's also a sign that bigger money is coming in. So I want to keep an eye on the Home Depot. Now, taking a look at some other stocks that we follow. Here is Apple. Not getting much love. There was a bounce on Wednesday, and now we're just back testing the 5-day on the top side of it. We're into this gap a little bit, upside targets. Because this was such a quick drop, just go moving average, moving average, moving average. Those would be the upside targets. Google, trip to buy signal with a close above the 50-day on Friday. Again, bigger volume bars, up days beating the down days. 520-day crossover, close above the 50. You could make an argument, let's let it get above the 200-day moving average in purple, because then the target's up here at 1200. Amazon, seasonally bullish the moment we get to Cyber Monday. Right on cue, stock's gone from, let's just ballpark it and say, well, 1, 2, 3, 4, 5. It opened the day at 1539 on Cyber Monday, but the Black Friday before was at 1500. It just added 190 points. Not bad, 10% move in a week. And then Facebook. I haven't been talking about Facebook much because there's not a whole lot to talk about. It just keeps on face planting. We are getting a bit of a bounce here, but given its difficulty closing above the red line, not only does it need to get above that red line, it's going to need to get above the orange line. I think above the orange line is going to be the tell that, hey, maybe we're going to get a bigger bounce here in Facebook. Salesforce.com, big, massive day on Wednesday, follow through Friday with bullish engulfing as well over the previous day. Target back up to the highs, 160 on CRM. Marriott with the data breach, you guys have probably heard about that. It was everywhere, 500 million customers. Data could have been stolen. There's a little bit of support here, right around this 113, 114 area, but otherwise you're going right back down to the lows to find the next support level. PS, this is just something I was watching. Very, very low volume, but this stock went from 37 down to 20. Almost half its value was lost. I love to see these type of turnaround moves. So a fun little paper trade. Of course, paper is virtual money, fake money. We have a 5-minute 20-day cross. Once it gets above the 50-day, there's really no resistance up until the 31, 32 area and then back up here. And last but not least is YELP. This stock had this huge gap down. Once it closes above the high after earnings, after the gap down, that close was 34.07. The close on Thursday was 33.84. When you clear 34.07, the gap fill becomes the target. Once we get into the gap, then I can switch to maybe a 5-day EMA in blue, or if we get above the 20-day, even switch to the 20-day EMA in red as a potential trailing stop with a gap fill as a target. So a bunch of stocks there. The seasonality is still in play. The markets are moving higher. We are tripping buy signals. The seasonal stocks we talked about weeks ago with the airlines been outperforming very, very well. Delta, United, and now Home Depot starting to see a big influx in volume inside its seasonally bullish window as well. Wish you guys a great week ahead. I look forward to seeing you in the next video. Take good care.